Hey everyone, welcome back. Ready to decode the secret language of the markets. Today, we're going deep on technical analysis.
Yeah, we're diving into the world of charts, patterns, and indicators.
Our guide, a true classic. Technical Analysis of the Financial Markets by J.MURPHY. This book's been a go-to for, forever.
Definitely a must-read for anyone who wants to understand, well, how to read the markets.
It's not about predicting the future, though.
No crystal ball here.
More like learning to, see the signs, the clues.
Exactly. Think of it as understanding the story the market is telling through its price movements.
Yeah.
And that story's written in the charts.
So like all those hopes and fears, the rumors, the news, it's all baked into those lines and squiggles.
Exactly. Murphy's big idea is that price reflects everything, all the information that's out there.
Huh. So it's kind of like collective market psychology, all laid bare.
Right. You learn to read the charts. You start to understand the psychology driving the market.
Okay, I'm intrigued. So where do we even begin with this? Charts, I guess.
Charts are the foundation. The book talks about a few different types.
Oh yeah, like line charts, bar charts. Are they all created equal?
They each have their own strengths. But honestly, in technical analysis, candlestick charts, they're king.
Candlestick charts. Those are the ones that, well, they kind of look like little robots or something.
Yeah. Each candlestick tells you a story about a specific time frame, like the battle between buyers and sellers.
Right, the bulls and the bears. I always get those mixed up.
Bulls push prices up, bears pull them down. The body of the candlestick shows the open and close prices.
And the wicks show the high and low for that period.
Right. So you see a long wick above the body. Buyers were pushing hard, but sellers took over, pushing the price back down before the close.
So each candlestick is like a mini drama unfolding on the chart.
Exactly. And once you understand those little dramas, you can zoom out and start looking for trends.
Trends, like up, down, and sideways.
You got it. Uptrends, downtrends, and consolidations, those sideways movements.
Sounds simple enough. But how do we actually spot these trends in all the noise?
Trend lines are your friends. Think of them like boundaries on the price chart. Uptrend, you connect those higher lows. Downtrend, connect the lower highs.
Okay, so we draw lines to see where the price is heading.
Exactly. Channels are another good tool. They're like parallel trend lines, sort of a path that the price is following.
Like a price highway. Got to stay between the lines.
Exactly. Okay, so now we've got trends, but then Murphy talks about support and resistance.
Ooh, yeah, I've heard those terms thrown around.
Well,
What do they actually mean in the context of charts?
imagine a battlefield. Two armies clashing.
Okay, dramatic. I like it.
Support is where the buyers step in, preventing the price from going lower. Resistance is where the sellers push back, stopping it from rising.
So these were like key battlegrounds on the chart.
Precisely. You often see prices bounce off these levels, but, and this is important, sometimes those lines get broken.
Oh, that sounds intense. What happens then?
Those breakouts, especially when they happen on high volume, can signal a big shift in momentum. Like maybe a stock breaks above resistance on huge volume. That can mean a whole wave of buyers just jumped in.
So a breakout can be a big deal.
It can be a sign of a significant price move in that direction.
Wow. It's like we're learning to read the tea leaves of the market, but using charts instead of teacups.
I like that analogy.
So we've got trends, we've got support and resistance. Murphy also talks about these really interesting chart patterns.
Yeah, those are like patterns in the price action itself. They can sometimes give you clues about what might happen next.
Like what? Head and shoulders, triangles, flags. There's a whole bunch.
Each pattern represents a specific setup of buying and selling pressure, like a head and shoulders pattern that often suggests a potential trend reversal.
It's like each pattern is a puzzle piece, and we're trying to put them together to get a bigger picture.
Exactly. But remember, these patterns aren't foolproof. They're more like hints, not guarantees.
Right, they're part of the story, not the whole story. So what else can we use to, add more tools to our arsenal?
Technical indicators. They help you measure different aspects of price action, like momentum, volatility, whether a stock is overbought or oversold.
Okay, like what? Give me some examples.
Well, the Relative Strength Index, or RSI, that measures the strength of price changes to figure out if a stock is overbought or oversold.
So like if the RSI is super high, it could mean things are getting a little too heated.
Right. It could signal a pullback is coming. But indicators, always use them with chart analysis. They're not magic bullets.
Right, they're more like supporting characters in the story, not the lead actors. Okay, so we've covered charts, trends, patterns, indicators. What else?
Volume and open interest. Two often overlooked but crucial pieces of the puzzle.
Oh yeah, those. I always get them confused. Break it down for me.
Volume. Think of it as the soundtrack to price action. High volume confirms strong moves. Low volume might mean there's not much conviction behind a price change.
So like a breakout on low volume, not as convincing.
Exactly. Now, open interest. You mainly use that in futures markets. It tells you how many contracts are currently open, how many people are in the game.
More players, more potential for big swings.
Exactly. High open interest can fuel some serious price moves.
Wow. Okay. So with all these tools, charts, patterns, indicators, volume, open interest, can we actually predict the future of the market?
Technical analysis isn't a crystal ball. Nobody can consistently predict the future.
Right. Got it. So what's the point of all this then?
It's about recognizing patterns, understanding probabilities, and making more informed decisions based on what the market's already done.
Okay, so it's more like having a roadmap, not a time machine.
Exactly. It helps you manage risk and find potential trading opportunities.
But even with the best roadmap, you still need to know how to drive.
Absolutely. And that's where the human element comes in. Murphy really emphasizes the importance of psychology and discipline.
Oh yeah, keeping a cool head when the market's going crazy,
Hmm.
definitely easier said than done.
Right. Managing your emotions, staying objective, sticking to your trading plan. That's what separates the successful traders from the rest.
So technical analysis can give you the edge, but ultimately it's up to you to make the right calls.
Exactly. It's a powerful tool, but it's just that, a tool you have to learn how to use it effectively.
Well, I feel like we've just scratched the surface here. There's so much to learn about technical analysis.
Oh, definitely. But hopefully this has given you a good taste of what it's all about.
It's like opening a door to a whole new way of looking at the markets.
And now that you've had a glimpse, what patterns or signals will you start looking for?
Yeah, what clues will you uncover? There's a whole world of market whispers out there waiting to be decoded.
Keep exploring, keep learning. The markets are constantly evolving. There's always something new to discover.
So until next time, happy charting, everyone.